Hello and welcome. This is my first live broadcast in English. It's 5:32 p.m. in Turkey, Izmir, and the hours changed, as you know, according to summer and daytime. Summertime is changed. Now, the important news is that just before 2 days, tomorrow night, we will hear Turkish time at 9 p.m. and 9:30 p.m., 21 hours and 21:30. The Fed meeting results of maybe passing and skipping another rate hike, but then we'll hear the Fed president answer the questions of the press members. Now the problem is that all the markets are gearing up for this meeting. They are already rising or falling like a stone or rising like a rocket. So I like to let's watch together, and I like to show you the details. Okay. So now this is a record of the current situation right now. Early in the morning in the U.S. Market opening hours. As you can see, the gold price of futures have risen up to $2,016. Right now, they eased a little bit to $2,013. These are the futures for December. And as you can see here, so the stocks and commodities we have to watch separately. The major stocks commodities here we will see in gold first of all. Right now this is the gold futures, as you can see, and regular. If we hit the silver price is 23.34, and copper price is little down. Soybeans are high. Natural gas is extremely high, 6% up. The natural gas prices are up. Crude oil and Brent oil prices are up only 0.5%. And so this is and coming to the stock exchanges, right now we can see the individual stocks being shown here. Some Netflix has fallen 1%, Meta is about 1%, Google is fallen 0.5%, Apple is fallen about 0.8%, Tesla is slightly up at this opening hours. And then we like to go to see the indices, the stock exchange indices. Okay, the US 30 is down 0.17, US 500 is down 0.11, Dow Jones is 0.14, S&P 500 is 0.13, Nasdaq is 0.32 down. As you see, stocks exchanges are responding by falling. Dollar index is still at 106.31. So this is a controversy. Normally, this dollar index should rise if the U.S. Interest rates are going to increase. But right now, there's a silly situation. The dollar index is increasing together with the gold price is increasing. So this is a controversy. Normally, they should respond separately. But this is like... as you see, there is a strong buy signal for the gold at this moment, and it's ranging. Do you see the days range up here is $2,000 and $2,017? Okay, and this is the 52-week range, 2,085. So we must see 2,085 to be broken upwards if we are to see a big increase in gold prices. Otherwise, these are going to be remaining as just expectations, small corrections. But you can see the huge difference in a year. The lowest of the gold this year was 1618 US dollars, and highest was $2,085. There is a huge difference. So 1 year change currently is 22%. Okay, 21.91%. These are the contract sizes for the future, 100 troy ounces each. So at this time, let me go to indices, stocks, and currencies are I mentioned before. So U.S. bond yield curve, U.S. Treasury yield curve, because treasuries are important, as you see. United States yield curve. So we can see the 1 month yield is right now is 5.39. 2 months is 5.45. 3 months is 5.49. 4 months is 5.52. These are percentage per year. US 1 year is 5.45. 5064. As you see now, as the time goes by, they are decreasing instead of increasing. Normally, if you are lending someone a long-term money, your interest rate should go up. So as these are going down, means it's an inverted curve, which means you are heading towards recession. Okay, so 10 years is 485. See, it's less than 1, 2, 3, 4 months, even a year or so. So this is an inverted yield curve, which shows us we may be heading to a recession. How strong recession will be depending on Fed's actions. If they keep increasing interest rates, if they continue in December or future, they can end up with a very high recession in US. I have been expecting recession in the US since I reported the decline in the Fed printing of money, M1, M2, and since I think 8 months now, I was expecting it to come with a delay, which is called a lagging effect, to start in first quarter of 2024. Expected the second quarter latest, so there is recession coming. What can keep the recession go smooth or hard? How do we know if a recession is hard or smooth? Soft landing or hard landing? Amount of people kicked out of their jobs, okay? So a lot of people are kicked out of their jobs, then that's a hard landing. And if fewer people are kicked out, that's a soft landing. So suddenly we may see the Fed, although they never reached their target of 2%, it's already still at 4%, twice 100% more than their objective is. It was easier to reduce it. Well, not that easy. It took 10, 11 months to reduce it from 9% to 4%. It may take many, many long years, or many, many people losing their jobs, so to become to 2% that they are insisting on. I hope they succeed, so that we can do the old calculation, like making 5% per year and adding 2% for the inflation and 3% to retire. Okay, but that doesn't work now. The old formula just is dead since last 2 years. You have to make way above 5%, which is in inflation, official inflation. You should make at least another 3-4% above that, so you can retire without your main money losing value. So this is going to be a short announcement English video for today. I don't want to extend it too long. We'll see how the prices will keep working tomorrow. This is normal. Just before a Fed decision, markets responses, although it's clearly known that Fed is going to skip the interest rate hike this time, still the let's say markets are testing the waters. So do I expect the gold to rise further? Maybe not today and tomorrow, but I definitely expect it to go to over 2,200, up to 2,500, and I have a good reason. Inflation. It's the US dollar that's falling. It's not the gold increasing in value. So if US dollar lost about 30% of its value in 3-4 years, it's very normal for gold prices to go up 30%. Okay, so well, they are already from 1,600 to 2,000. That's the 30%. Well, we had well before that we had 2,000. So it's not. It depends on where you start calculating the inflation from. To me, the last year is a good starting point. That's why I didn't say 2,000. 30% on 2,000, 2,600. I said 2,200, 300 are the not the market logical price. This is just logical pricing. You cannot know where it goes because especially right now we have geopolitical tensions and it's continuing. There's no ceasefire. And it's not the matter of how long and how bad Gaza is being bombed. The big problem is whether the Iranians and the others are going to join in the war. And today I read reports that Houthis are sending missiles, long-range missiles and drones from their area to the Israel. So bombing. So it's already expanded. But we'll see the Lebanon and Syria, how they all act. And the main players, of course, Iran. Okay. And now they are claiming they have nothing to do from the attacks made from Syria and from the north. But we'll see how long it will last. So because not too long later, this must be coming to some sort of a up point, peak point, because the resistance from Israelis are also increasing against the President Netanyahu. So he has to be maybe solving his problem as quick as possible. And on the other side, the others are getting every day more and more involved in this. So time is of essence. And then markets are also pricing this worldwide. So I hope you a good night. And let's see what comes out tomorrow after Fed's meeting. I call the U.S. Bird Watchers meeting. Why? Because they are either dovish or hawkish, depending on what, how they are, how they share the roles within the Fed meeting group. See you all tomorrow.